Welcome back to Buddy's More Crypto, your go-to for real updates, market moves, and the stories that actually matter in crypto. Today is a big one. Bitcoin has officially hit a new all-time high, and it's not just momentum. It's backed by major institutional shifts and macroeconomic trends. We'll break down what's driving the surge, how Ethereum and altcoins are reacting, and why this week's legislation in Congress could have long-term implications for the entire crypto ecosystem. Before we jump in, I just want to say thank you to everyone who's been tuning in and supporting the channel. We're currently at 685 subscribers, pushing towards our first milestone of 1,000 subscribers. If you're enjoying these updates and want to stay ahead of the noise, hit that subscribe button and let's grow this channel together, one video at a time. Today, Bitcoin broke through $112,000, officially setting a new all-time high and continuing its momentum from previous breakouts. This puts Bitcoin in price discovery mode, meaning there is no resistance overhead and is uncharted territory. Now, what's driving this move? ETF inflows. Over $14 billion has flowed into spot Bitcoin ETFs since they launched earlier this year. BlackRock's IBIT and Fidelity's FBTC alone are seeing daily inflows exceeding $500 million combined. That kind of consistent demand is putting upward pressure on price. Reduced sell pressure. Bitcoin miners are holding more and selling less. Also, over 70% of Bitcoin hasn't moved in over a year, meaning long-term holders are staying strong. Less supply plus more demand equals higher prices. Macro tailwinds. Inflation remains sticky in the US and Europe. Central banks are still hesitant to cut rates too aggressively. Global instability from trade wars to regional conflicts has more investors looking at Bitcoin as a geopolitical hedge. Bitcoin isn't just a speculative asset anymore, it's being treated as a strategic one. What do you think is fueling this rally the most? ETFs, macro pressures, or long-term holders refusing to sell? Drop your thoughts in the comments. While Bitcoin is making headlines, Ethereum has also been climbing, recently gaining momentum with increased institutional activity and ETF demand. That said, Ethereum is currently holding steady around $2,600 and $2,100 range, and has not yet broken its previous all-time high of over $4,100. It's showing strength, but is still in consolidation. Spot Ethereum ETFs has been approved and actively trading since July 2024. Over 9 funds from issuers like BlackRock, Fidelity, and VanEck are now live. Here's why that matters. Direct price exposure via brokers. Investors can now hold Ethereum in brokerage accounts without having to navigate exchanges or self-custody wallets. Strong institutional demand. BlackRock's ETA has seen 19 plus consecutive days of inflows, signaling long-term confidence in Ethereum's role in Web3 infrastructure. Staking on the horizon. While staking isn't enabled on current ETFs due to SEC restrictions, there's movement towards staking-enabled ETH ETFs by 2026. That could boost yields and drive more inflows. In the altcoin space, Solana is up over 8% this week, showing strength with growing DeFi and NFT usage. Chainlink has held strong support and is showing increased whale activity on-chain. Avalanche is gaining momentum with subnet development focused on gaming and enterprise. If Bitcoin dominance cools down, we could be looking at the beginning of alt season. Are you already positioned in Ethereum or other altcoins like Sol, Link, or AVAX? Or are you waiting for the breakout confirmation? Let me know in the comments. Now, let's talk about something that isn't priced in yet, but could have massive long-term impact: U.S. crypto legislation. This week, lawmakers are debating 3 key bills during what's being called Crypto Week on Capitol Hill. The Genius Act will regulate stablecoins at the federal level. It mandates one-to-one reserves, regular audits, and clear oversight, potentially giving assets like USDC an edge in mainstream finance. The Clarity Act finally aims to draw the line between securities and commodities. This would end the turf war between the SEC and CFTC and give builders clear legal guidance. The Anti-CBDC Act will prohibit the creation of a U.S. central bank digital currency. Supporters say it protects financial privacy. Critics argue it could limit future payment innovation. These bills, if passed, could become the foundation for how crypto is treated in the U.S. for the next decade. Do you support clear regulation through these bills? Which one do you think will have the biggest impact? Stable coins, token classification, or banning a digital dollar? So to wrap it all up, Bitcoin is in full breakout mode, backed by real institutional capital. Ethereum is holding strong with steady growth, but it still has room to run before reaching a new all-time high. Altcoins are quietly setting up for what could be the next leg up, and lawmakers are finally moving toward clearer crypto regulation. This is a pivotal time to be in crypto, and we're going to keep you ahead of it. Thanks again for the continued support. We're sitting at 685 subscribers, and the push to 1,000 is on. If you haven't yet, go ahead and hit the subscribe button, drop a comment, and let's build this community together. Where do you think Bitcoin is heading next? What altcoins are you watching before the next breakout? And what kind of crypto content do you want to see more of on this channel? As always, buy smart, sell smooth, and keep it butter smooth. See you in the next video.